Okay, the third thing you're going to do once you have your investor, you have your property, you're going to analyze your return on investment. You have to find out for your investor, is this a deal for them? Is this not? Remember, your investors are going to have to figure out how much money they have to bring in order to close. So they've got to figure out the purchase price plus the rehab in order to figure out if this is going to be a deal for them. Okay, on the flip properties, your investors are going to be looking for equity in it. Just a quick math, just keep it simple, is to take the ARV, the after repair value. You've got to subtract the purchase price and the amount of the rehab. And whatever's left over is going to be your equity after you paid off your mortgage. And for the simplicity of all of commissions, closing, is going to be that final number that your investor is going to make on their flip. Now, if your investor is looking at purchasing for a rental, then they're going to be looking at the annual income for their investment that they're getting from renting it out. So again, just simple math to keep it easy. You're going to take the annual rent and you're going to divide it by the basis, which is the purchase price less the rehabs. And you're going to come up with a percentage. Again, talk to your investors. Everybody has a different strategy. Everybody, of course, wants the most return, the most equity, but talk to your investors and see what their strategy is when they're wanting to purchase these flips and or rentals.